Tesla is kind of killing me as an investor. With a concerning Q4 performance and a general decline in EV interest, Tesla shareholders may be wondering if these are short-term challenges or long-term trends. In this video, let's talk about the latest news around Tesla and whether I've decided to stay invested in the company. Let's get started. The last time we spoke about Tesla, there was a ton of focus on demand overseas. They literally entered a price war with other EV manufacturers, most notably China's BYD, all to reinvigorate sales in larger markets outside of the US. At the same time, the company was preparing the much anticipated release of the Cybertruck and the announcement of a new Model 3 body design. So not all bad news, but what has happened since then? The biggest thing was the most recent performance report for Q4 of 2023, in which growth appeared relatively stagnant across the board. Overall revenue grew by 3%, and auto revenue grew by only 1% from a year prior. But what's most concerning to me is that margins continued to contract. Operating margin came in at 8%, a number that tracks 2023's destruction of one of Tesla's main competitive advantages. Tesla is known for its double-digit margins that they achieved through efficient manufacturing, vertical integrations, and what was before the last 2 years, luxury pricing. The first two factors are still there, but the price war with competitors has really affected the per-unit bottom line. The company flat out said a primary contributor to weak revenue growth and depressed margins was the declining average selling price of their vehicles. The other lowlight of the earnings report was Tesla's outlook, their guidance for investors already looking to the future. What kind of performance can they expect in Q1, Q2 of this year? Remember, stock prices are as much about the future as they are about today. Tesla expects auto-related business growth to stay down relative to previous cycles. They recognize there's an undeniable slowdown in EV demand and a serious ramp-up in competition, even if they didn't exactly provide tangible numbers. But let's look past the financials for a second. The Cybertruck finally hit show floors, and the first batch of orders were delivered in late November, early December. Since then, it's speculated that almost 10,000 Cybertrucks are being ordered every day. And keep in mind, that's on top of the 2 million something orders that already existed since production was announced. Now, these orders aren't obligations to follow through with the purchase, but still, super impressive demand to start with. What's interesting is that the Cybertruck isn't necessarily grabbing the attention of buyers because of the economical price point, like the Model 3, because the truck is going to cost you a pretty penny. The lowest trim level, a rear-wheel drive truck, will set you back about $60,000, and the highest trim level, named the Cyber Beast, takes you into that six-figure price tag. It's not unheard of for trucks to reach these price points, but a six-figure vehicle is no joke. Tesla is already cautioning investors and customers about production meeting this level of demand. Building the Cybertruck is a much more complicated manufacturing process compared to the other vehicles. Even if the company could produce 250,000 trucks a year by 2025, a million orders would take several years to fulfill. And this is something I wasn't aware of. One of the largest production limitations isn't putting the truck's body together or sourcing its materials, but rather the batteries that power the Cybertruck. Tesla uses their 4680 battery that has allowed them to push both the range and the power of their newer products. But they're facing serious roadblocks to scaling the battery's production, directly impacting the output of the Cybertruck. So to solve their existing problems with producing enough Cybertrucks to meet demand, they need to also solve their existing problems with producing 4680 batteries. And that's always going to be the challenge for businesses that sell physical products. Profitability is directly tied to the manufacturing process and whatever systems are in place to scale. Cybertruck quality issues are coming to light on social media, mostly focusing on the construction and design of the exterior body. There's also some concern that the wheel covers designed to protect the wheel actually damages the tires, which isn't ideal. And on top of all of that, there's reports that the truck is rusting. Look, the wheel cover thing, easily fixed. Panel gaps on the exterior, not completely detrimental to the functionality of the truck. But rust? Rust is literal cancer for cars, even if it's surface level. Rust spreads and will eat away parts that are extremely expensive. That said, only a few users online have reported the body corroding. So possibly a non-issue? I certainly hope so. Because as I've said in the past, Tesla's largest advantage is its brand. And nothing can kill a brand quite as fast as poor quality products. You don't want Tesla to be put in the same conversation as Ford or GM when it comes to quality control. The EV industry is down across the board, but that doesn't mean all of Tesla's competitors are struggling to the same extent as a Rivian or a Lucid. BYD is still performing with their command over the world's largest EV market, which is China, by the way. BYD's profits meaningfully grew as they sold more and more vehicles in markets that Tesla continues to struggle in. They're pushing a large number of units and providing their customer base with a variety of models to choose from. Why I tend to focus on BYD more than other EV competitors is because they're the closest to matching what separates Tesla from the rest of the industry. BYD has market share, vertical integration, and an ability to offer their EVs at lower price points without sacrificing profitability. The same cannot be said about Ford, GM, Lucid, Rivian, or anyone else. BYD may not have any interest in the US market, but they're still worth watching very closely if they pose a barrier to Tesla's future global growth. So with all of that said, the big question, will I keep my Tesla shares? Absolutely I will. And here's the very simple reason why. All of these recent events are short-term factors that don't significantly impact my long-term outlook on the company. The quarterly peaks and valleys of an industry are not enough to dissuade me from being invested in a business I believe can continue to dominate with innovation and brand. Were the financials underwhelming? Yes. Was the company's outlook for this coming year unfortunate? Sure. But when I invest in something, it's with a multi-year time horizon, 5, 10 years. So the long-term trends matter most to me. And those are still looking great for Tesla. Revenue and profits are still maintaining the tail end of exceptional growth over the last decade. And that's despite all of the woes we've discussed. On top of the overall financials, Tesla's business ventures outside of auto sales are beginning to show results with energy storage and other provided services like charging stations significantly up. As a long-term investor, a few down quarters, or even a down year or two, are concerning, but not enough to change my position, especially when it appears that the entire EV industry is in the valley of a very natural business cycle. I care more about what the competition is doing, how Tesla continues to innovate, and the overall adoption of EV around the world. For me, if Tesla is worth holding onto today with EV barely disrupting gas-powered vehicles, it will still be worth holding tomorrow when EVs are more practical, economical, and sustainable. I look forward to how Tesla's supercharging network expands alongside new EV infrastructure, and how many more auto manufacturers adopt the technology. I also look forward to some of Tesla's robotics, which is a subject for a whole other video. And I look forward to seeing if the Cybertruck is some Halo Warthog gimmick or a legitimate take on utility vehicles. Okay, let's leave the video here. I'm sure there will be plenty of Tesla news to cover in the near future. Tesla had a rough Q4 and will likely continue to struggle throughout 2024. Does that make me want to sell my Tesla shares? Absolutely not. I still believe the company is trending in the right long-term direction. As always, thanks for watching. Until next time, take care of yourself and best of luck.